Well, here on Breaking the News, we don't typically get into earnings calls and how companies actually make their money, but today we are going to. We're talking about Target, that huge local company that has made a lot of headlines in recent months, and they're doing it again today with their second quarter earnings announcement. Some highlighting the company's sales being down 5.4%. That's the first drop that big in sales for Target in 6 years. Some blame the Pride Month backlash back in May as this big reason why. But we wanted to find out what's really going on with these numbers. And will these numbers change the way the company supports the LGBTQ community moving forward? Here's Gordon.
Welcome to the Target Corporation second quarter earnings release conference call.
Over the last 3 months, Target as a company has dealt with a lot of challenges. Inflation, changing consumer habits, and a controversy involving their annual Pride displays in stores.
Many of our store team members faced a negative guest reaction to our Pride assortment.
During Wednesday's earnings call, company leaders mentioned the issue several times. The displays caused backlash, and then more backlash when the company decided to remove them. The company didn't say directly how the issue affected their profits and sales, which were down during that time 5.4%, according to the company, but the company did say the issue certainly had an impact, and it has changed their plans moving forward.
In this case, the reaction is a signal for us to pause, adapt, and learn so that our future approach to these moments balances celebration, inclusivity, and broad-based appeal.
We asked the company for more clarification. Are they going to support the LGBTQ community moving forward? A company spokesperson responded saying, quote, "We'll continue to offer a Pride assortment. As for what is included in those assortments, that changes from year to year, and I don't have any specifics." Meanwhile, the company is dealing with those lower sales numbers, and they're expecting lower sales through the end of the year. And how did the stock market react? Well, the stock went up nearly 3%. Wait, what?
It's good news, bad news.
U of M business professor Mark Bergen says while it's true, the company's numbers show they sold fewer products last quarter, but they made more money on the products they did sell.
They've been learning how to raise prices, which means they've been learning places to explore higher margins.
Their margin is how much the company makes on an item after they factor in all their costs of doing business. Last quarter, Target says their average margin was 27%, a sizable increase over 21.5% last year.
The fact that Target could hold and gain on margins is actually a very promising sign.
Bergen says the big challenge for Target will be finding the right balance between higher prices and pushing away customers. This will be especially important over the holidays, a make or break time for retailers, a time also when many shoppers are focusing more attention on prices.
It's an ever-changing game. It's also a report that today is just one marker in time. Over the last year, Target stock is down, but that's the same story for many other retailers its size.